Today we're going to talk about a new NFO in the market. Motilal Oswal has brought in a new fund. It's an equity-focused fund, 35 stocks alone. We'll find out if it makes sense right now to invest in that NFO. So I'm going to bring in Dhirendra Kumar. Dhirendra, thank you so much for joining in. Let me take you through the NFO. Motilal Oswal, most focused multi-cap 35 fund NFO open until the 17th of April, which is tomorrow. The scheme will invest in 35 stocks across the market, irrespective of capitalization. What's your view of the investment philosophy, Dhirendra? Are you impressed?
My sense is that, more and more such well-defined funds are getting launched. It's a slightly unusual fund in the sense that it is stating a quite an unusual number, 35 stocks, and it is going to be a well-diversified fund. It's benchmarked to BSE 500. It will be, spreading its portfolio across the market's breadth. So it is not going to be a focused, on large caps or mid caps. It will be investing across, and I think on that count, getting a fix on a specific number of stocks in the portfolio is unwarranted. This is unlike all other funds of Motilal Oswal, which were ETFs. This is going to be an open-end fund. So I think let's see how it evolves. We have plenty of options to choose from. There are many multi-cap funds which invest across the breadth of the market. So let's see how it evolves.
Well, obviously NFOs don't have a track record, but let's look at the fund house, Dhirendra. How would you rate Motilal Oswal AMC's fund management so far? A lot of their work has been in ETFs, but still, would you say they've been impressive?
Motilal Oswal's all other funds, it's not a very old fund company. It started in middle of 2010, and initial years it launched only the ETFs, and they were very well defined. In fact, the Nasdaq 100 was a novelty. Motilal Oswal's M50, which is a fundamentally weighted variant of the Nifty. It invests in the Nifty stocks, but not in the same proportion. It follows a methodology whereby the financial strength of a company gets a higher weightage, but that idea hasn't worked so far. We have to see. Of course, this fund has not seen a good weather as yet, but it has been a fairly, it is a fund company which has launched very novel product. Some ideas have worked very nicely, some ideas haven't, and all the ETFs had a huge cost advantage. Unlike that, these open-end funds, something like this M35 or the previous fund, they are going to be ordinary open-end fund without that cost advantage. So I would see that it is evolving into a very generic fund company with usual kind of funds, open-end funds, but its earlier funds had the novelty and the cost advantage.
So what's your final verdict on the Motilal Oswal focused 35 fund, Dhirendra? Should investors be looking at the NFO until tomorrow? Should they be waiting perhaps till it builds a track record? What would you advise us to do?
No, I don't think it has a worthwhile background or a story or a thesis to bank on today. Investors also have plenty of options to choose from. So let this fund incubate its track record, and it certainly isn't worth investing. It's an interesting idea.
Well, you said there are better options in the market right now, so I'm not going to let you go without telling us what these options are. Give us a list of multi-cap funds that investors can use at this point if they're looking to make an investment.
Yes, there are plenty of course, we have seen that, the value research classification, the way we classify multi-cap funds, where the minimum of, 40% in large cap and rest in other stocks gets classified as multi-caps, and we have seen that the large cap orientation of funds in equity funds in general, many funds have moved from multi-cap to large and mid-cap category. But I would say that still there is plenty to choose from. There are many good funds here. The impressive fund with reasonable history will be the BNP Paribas dividend yield fund, or L&T special situations, or the Pine Bridge equity fund, or the principal growth fund. That's another interesting option.
All right, Dhirendra, they're giving us options as alternatives to that NFO that we were talking about. We have a few questions. KM Sridhar has written in, Dhirendra, he's looking for a safe investment for a short period of 1 to 2 months. He'd like you to give him a couple of suggestions for investment options. Also, Dhirendra, for those of our viewers who are interested, given where the interest rate cycle is at this point, what should we be investing in to take advantage of it?
Investing for 1 to 2 months, don't consider anything beyond, liquid fund or ultra short-term fund. Liquid funds, they are yielding very decent return and the money is virtually on demand, and I don't think my recommendations matter there much, just to be guided by the expense. Looking at ultra short-term fund, consider the DWS or the Magnum Income Fund, the floating rate plan or Sundaram's ultra short-term plan.
Another question, Prakash has written in, he invests in the Birla Sun Life Gold Fund and the L&T Gold and Equity Fund. Now, he also holds DSP BlackRock and HDFC Top 200 and Top 100. Should he stay invested in these funds or switch to other funds right now, Dhirendra? What would you say?
I would suggest that you consider, first you ask yourself a few questions, that how soon you need this money. If you need this money in about 5 years, then consider 1 or 2 balanced fund and I would strongly urge you that get out of these gold funds or this combination of or these gold hybrid funds. They are not worth it. There was a time when it looked very compelling. It was a tactical investment, but I don't think it is meant for investors who will be regularly accumulating their savings into such a fund. Possible that for a while it works, but I don't think it's a very sound approach. So consider, about 5 years, consider 1 or 2 balanced fund and invest in them regularly. If you are looking at a longer time frame, then consider one of the 2 portfolios that we run for you, the aggressive growth portfolio or the growth portfolio.
Right, I'm going to try and squeeze in another question. Nalini Mohan has written in, she's 45 years old. She has 3 lakh rupees as a settlement from her previous employer. She wants to know where she should invest this money. Now, she hasn't given us a time horizon, Dhirendra, but for the 3 lakh rupees that she has in cash right now, where would you like her to put it?
If you are unlikely to need this money in the next 10 years and you want this money to be accumulated, to translate to grow into a substantial sum, then I would say that consider 1 or 2 funds from our growth option. But important thing will be that don't invest all your money at one go. Invest your, spread this 3 lakh rupees. Stagger your investment over the next 6 to 8 months. It will be very undesirable to be investing at one go, just in case we are likely to get into a phase where the market will be extremely volatile, and that could be quite unnerving. So stagger your investment into our growth portfolio or maybe our stable growth portfolio if you are you are unlikely to need this money for at least 10 years.
All right, Dhirendra, many thanks for answering our questions. If you have any questions about what you heard, write to us on the email ID that's on your screen. With that, it's back to Nikunjan Aishan.